I am of the belief that Model Y in Texas is being slowed a little bit to allow demand to catch back up. They don't want to cut prices again just yet. So the alternative is just slow production just a little bit. This may surprise you, Herbert. I'm still quite bullish.
If you have been a Tesla stock investor for a while, then you have heard many people say that Tesla will sell every single vehicle that it produces. But I, to that, say, at what price is the question. This is a warning to all Tesla stock investors that potentially we could see more price cuts off the Model Y. However, the price cuts for the Model S and X are working very well. Interestingly, the Model 3 inventory in the US also is fairly stable, and I reported a little bit earlier that perhaps the Model 3 right now is receiving lower inventory discounts than normal, which would suggest that Tesla is basically effectively perhaps increasing prices for the Model 3. But if you look at the Model Y, this shows me a few things. Number one, perhaps Brian is right and Tesla is suspending production on purpose just because it needs to align better with the demand. However, the second point that I would like to make here is if you look at this Model Y inventory level, you can clearly see that it just ran up like crazy up until roughly when the Texas factory was shut down, which was reported on Tesla Radio on September 6th. And a day before the actual production shutdown was confirmed, I talked about it on the channel, indicating that possibly the next day this indeed could happen, and it ended up happening. According to this chart, the inventory reached its peak on September 3rd, and then it started going down. Another possible way to interpret this would be to say, well, Tesla knew this was going to happen, so it tried to ramp up the Model Y production as much as it possibly could, and then that built up the inventory. And if this is the case, this would be pretty bullish because it would mean that Tesla can ramp up Giga Texas very quickly. Let me answer this question. I already answered this question on Sunday and I shared it with my Patreon members, but now let me share it here as well. On Patreon, by the way, you can also see my exclusive valuation model, only available on Patreon. The thing is, that's definitely not the case, at least based on VIN numbers from DMV. And you can actually see, if you track these VIN numbers, that production slightly slowed down already this quarter, even before the production shutdown. Specifically, I'm talking about Giga Texas Model Y production. And interestingly, the slowdown happened exactly from July 1st. So until the last day of June, the whole quarter, it was very, very steady. And then everything slowed down immediately once the new quarter started. So if Tesla cuts prices for the Model Y in the US, just don't get too surprised. Now let's talk about Q3 delivery expectations, and this is what you need to see first.
469, 420. That is my actual delivery number. If you ask me for a delivery number, that is it.
The actual delivery number was 466,000, which exceeded the analyst consensus by quite a bit. Now, Troy's estimate was slightly higher than the consensus estimate, so Troy was generally looking in the right direction. But Brian's estimate of 469,000 came a lot closer to the actual number. So let's hear more from Brian about Q3 expectations because he got Q2 so right.
My projection from first week of the quarter was that numbers would be down. And I've issued a few revisions since then. But the highest I went is that they would be about flat. And now we're seeing that, no, in fact, they're a little bit down. So what we've got is Fremont should be chugging along as usual. You might see a 1 to 2% increase. Then you've got Shanghai, which we know should be down. The Model Y lines are running just great. One of the two Model 3 lines is running just great, making performance models that can be shipped to Europe and sold internationally and domestically.
And Right Tesla Canada is reporting some good news here. A new version of the Tesla Model 3 Performance has appeared in certification documents for Europe. The new variant has a new motor identification letter suggesting Tesla has upgraded the performance as part of the Project Highland refresh. When Tesla launched the redesigned Model 3 in China, Europe, and other regions earlier this month, only the rear-wheel drive and long-range variants debuted, with the top-of-the-line performance variant being strangely absent. Even when the Model 3 was certified by China's Ministry of Industry and Information Technology, the performance variant was not included, leading to some speculation Tesla may have killed it off. Not only have they not killed it off, it looks like they may have even improved its performance. According to the European type certificate issued by the Dutch Vehicle Authority, dated July 7th, 2023, and shared on the TFF forum, the Model 3 performance now has a T in the 8th digit of the VIN, the digit which identifies the type of motor slash drive unit in the vehicle. Here's the whole document, and you can see here there's a letter T, but it clearly says it's a dual motor performance, but it has a letter T, which initially suggested that perhaps it could be a tri-motor setup, but it very clearly says it is a dual motor, not a tri-motor. What Tesla may have done is kept it as a dual motor setup, but upgraded one of the motors, most likely the front, to the same one that is found on the Model S and X Plaid. This would improve the top-end speed and acceleration of the Model 3 performance, something that has hindered its performance in races longer than a quarter mile against gas-powered supercars. Yeah, when I get into my Model 3, the initial acceleration is pretty good, and then when you get to like maybe 60 miles an hour, you notice a pretty big slowdown in how fast you accelerate then. We still don't know when the refreshed Model 3 performance will debut. Cars are already being shipped from China to those markets where the new Model 3 is available for purchase, and there have been no signs of the performance variant having entered production at Giga Shanghai, according to Drive Tesla Canada.
But the Highland line is still ramping. That's a new product with substantial changes. And while the numbers are looking great so far, this does suggest that they would be down. If we look at the CPCA numbers, the China Passenger Car Association, we can see registrations have fallen for 3 straight weeks, suggesting that they have moved the backlog of the previous cars and that the new ones are still ramping. Moving over to Berlin, numbers should be largely unchanged. And then in Texas, we've seen quite a bit of slowdown on the Model Y line. And we haven't heard a reason for that. It could be that there's some retooling going on. We do know that they've temporarily discontinued the 4680 version of the Model Y out of Texas, but that's likely to stockpile batteries for the launch of Cybertruck. I am of the belief that Model Y in Texas is being slowed a little bit to allow demand to catch back up. They don't want to cut prices again just yet. So the alternative is just slow production just a little bit. So those numbers should be down a little bit for Model Y out of Texas. And then you've got Cybertruck, which has not yet entered production. And even though they are making some, they will not be counted until they're saleable, which is not a point we have not reached. And I don't believe we're going to be counting any Cybertrucks towards this quarter's figures. I think any deliveries we see at the delivery event will be likely for employee purchases. And there may be a handful, but not a meaningful number that would move the needle on, 400, 500,000 in total. So this quarter may be down a bit. Next quarter, I expect to be up a bit. And the rumors we're hearing on Highland refresh, the 3 fresh out of Fremont, is that it will not be ready until Q1. So I think Q4 is going to be pushed real hard to hit the 1.8 million sales figure target, production target, and that in Q1 they will begin revamping to ramp the new Model 3 out of Fremont.
This seems like a pretty fair assessment to me.
The days of inventory will be drawn down a bit. They will not be the 16 or 18 days we saw last quarter, but they won't draw it all the way down. It won't be like at the end of 2019 when every showroom was stripped of its demo models so they could sell them in time to get the credit, the full credit. This will be, they do have some opportunity to draw down. The reason it's not necessarily going to save them is because the slowdown is only on Model 3 and the buildup of inventory was across all models. So it didn't matter how many S and X you may have had stockpiled. That doesn't help you when the model that's slowed down is the Model 3.
Fair point. If I only want to buy a Model 3 and not the Model Y, then you have nothing to sell to me. Brian also made a comment about Troy's expectations for Q3 versus Q2. Let me play exactly what he said while I'm showing this to you.
I think the reduction in Model Y from Q2 to Q3 is too dramatic. It's not going to be down 25% plus. That's too large of a decrease. That's an awfully big decrease. I think what's really going on is it probably wasn't 42,100. And remember, we all have to read the tea leaves a bit because these numbers are not published. We're left making some deductions.
I mean, in my mind, Q3 numbers shouldn't be a big deal because it's built in. They announced it at the earnings call. People are aware that the reason why they're doing it is a temporary slowdown in production line, refactoring it, which is going to be better for Q4. And what matters, I think, is down here, right? So Tesla's target is 1.8 million, and even Troy is still at 1.8 million, despite this whole talk about reduction in the deliveries or production in Q3. So for me, it's a nothing burger. But so in your mind, you're still pretty confident that this is what's happening, right?
Well, absolutely. You have to make a pit stop to come back into the race even hotter.
If you are really a long-term investor, then this is just all noise. But if it's really fully built in, then we shouldn't see the estimates change. Troy's estimate just changed noticeably, as you can see here. And I think this estimate still probably expected some refresh Model 3s delivered within China this quarter, and we are not seeing any of these delivered yet. Tesla already has the permit, but there are no deliveries, at least while I am recording this video, which would then make you think that Troy is likely to actually lower his estimate further if Tesla does not deliver refresh Model 3s this quarter. And Gary's estimate is at 440,000, and I think he expects the consensus to also come down. So I wouldn't be so sure that everything is actually already priced in if the consensus estimate comes down. I do, however, agree with Herbert that the more important number is the delivery number for the whole year, which is at 1.8 million deliveries roughly. And Troy still thinks that Tesla will exceed 1.8 million deliveries just by a little bit.
Looking out past Q3, we're going to get some answers awfully soon on what to better expect. Trying to predict Q4 and especially Q1 production numbers for Cybertruck today is impossible. We don't know what the production complications or delays are. We don't have a clear picture on the battery situation. Are they able to use a 2170 pack in it for a standard range version? We don't yet know. But what we do know is they're very nimble. And when demand softened for the long range, they made a medium range for a while to sell it to people. And it was, not something they wanted to do, but something they were able to do. They made corked versions of the S75 and sold them as S60s because we'd rather have the sale than sit on inventory we can't move.
Yeah, right now we still have a lot of questions about the Cybertruck. What we do know, though, is that it's a real truck and it is coming very soon. And most importantly, that it might have 2 million reservations already. The Cybertruck will have a demand problem. There's going to be too much demand for it.
This may surprise you, Herbert. I'm still quite bullish.
What is your end of year? Tesla still says the 1.8, and they said many months ago earlier on, I don't think they repeated this statement in the Q2 earnings call, but they did say that it's 1.8 million, but could be 2 million. That was a long time ago. Right now, they still reiterate the 1.8 million. Where are you at this point for year end?
Over 1.8 is my take. The only obstacle there would be if there's an unforeseen problem ramping the Cybertruck. The Model Y lines can get back up to speed. Hopefully, they have not sold every car they can at today's prices, but if they have, they'll drop the price another $1,000, $2,000. And kick sales back into high gear.
Yep, exactly. In other words, also, don't be surprised if Tesla cuts the price of the Model Y again by a little bit. By joining my Patreon, you will get access to how much I think it is fair to pay per Tesla share each year between 2023 2023 and 2033. If you sign up for the investor tier of support, you will also get my valuation model of Tesla stock with a 45-minute video walkthrough. And YouTube says you should watch this video next, but if you haven't finished watching this discussion where Elon Musk participated and talked about the future, I highly suggest that you watch this one. This one was a pretty fascinating one. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.